All right. Well, the big, beautiful bill has officially passed. I don't know if it's I guess it's big. I don't know if it's beautiful. But today, I'm not here to talk about the whole bill. Let's dive into it. Enough about all the chit chat. Let's get down to the tax brackets. What matters? The tax brackets, tax, whatever. You know what I mean? Let's just get down to business. Let's see what's in here. Let's see what it's all about. But first, before we get started, and by the way, if you and I have never met, my name is Kenny Simpson. And oh, by the way, I've been doing financing for 1 to 4 unit properties. That means residential financing for 20 years, helped over 5,000 clients, funded billions of dollars of loans. And I shoot videos like this because I want to help you, educate you, help you understand what's going on out there in this crazy world. I love shooting content. I try to help break down those crazy things you hear, so I really understand the plumbing of how things work. So without further ado, let's jump into the big, beautiful bill. It's fantastic. It's amazing. I don't know about that. What is so great about this bill that is going to help us out in real estate? Because the one thing that I know everybody in real estate really is focusing on right now and they care about is those freaking interest rates. Is anything in this bill going to help the interest rates? There is. And I've been talking about it. And so if you haven't been paying attention, we will dive into it because I know what you care about and what I care about. Getting those interest rates down, it lowers payments. It makes our cash flow better on properties. It's more affordability. It just makes people want to go buy a house when the rate's in the 5s instead of in the 6s, guys. I get it. I'm in the business every day. It makes more sense to my wife over here that does commercial financing. It just doesn't even make sense to buy deals with these rates. So things will start to make more sense. They will come together. Rates will eventually come down. But we have that stubborn person, Jerome Powell, which nothing in this bill will help us out with that. But let's dive into it. So the first thing, what is good for real estate? What are we going to love? I'm going to break these things up. We're going to talk about the good, talk about the bad, and then we're going to talk about some other stuff too. So quickly, the one thing that we're super excited about is the 100% bonus depreciation. That means obviously that now you can buy a real estate, you can buy an investment property, you can get a cost segregation. You can do that, send it to your CPA, and you can potentially wipe all, some, or part of your income depending on how you're set up. Keep in mind, in order to do this, you need to go call your CPA to see if you qualify, right? And then if you do qualify, then you can go call a cost segregation person. If you don't have one, hit me up. I'll give you one that we work with. I refer to a lot of people. They do a great job, very simple. This is saying it's forever. That is incorrect. I hear people saying that. That's because they don't know how this thing works. A new administration can come in and take away this law or change it, and forever could be over. So hopefully this is around for a long time. It's great for real estate. It's great for the market. Talk about interest rates. You've heard me talk about this. SLR, Supplemental Leverage Ratio. Kenny, when you say that, banks no longer penalized for holding treasuries and MBS. This encourages banks to buy more bonds, which could help lower long-term rates. This could be one of the most overlooked tools in bringing down mortgage rates. Not overlooked by me, because I've been saying this. Let me give you an example how we know this works. I'm going to go quick. You ever heard that thing, the lockdown, COVID? Remember that pandemic? Do you guys remember that? I don't know, yeah, right? Remember that the government shut everything down, then they sent all trillions of dollars to the business. And they sent trillions of dollars or whatever the hell to all us people, right? You got a card, you got money, it went into your bank account, right? Remember that? Yep. Okay, we're right here. Okay, cool. They flushed the banks because all the money went into your bank account with trillions of dollars. Then they called the banks and said, hey, Mr. Banker, Jamie Dimon, all you, I need you to take that money and dump it into treasuries. Hey, that's a great idea, but you have this rule, the SLR. What? Oh, we'll suspend the rule. They suspended the rule. Banks dumped all the money. They think that equated to about a 0.5 point lower in interest rates. Let me repeat, a 0.5 point lower in interest rates. So Scott Besson came in office, found that this stupid thing existed, so we got to get rid of it. The big, beautiful bill, obviously, is going to get rid of it. And now Scott Besson says they're going to encourage banks to buy more treasuries to help out with government debt, all this stuff to bring rates down for all of us. He's thinking this could drop 10-year treasury by 30 to 70 basis points, which could, if that drops 30 to 70 basis points, that would help interest rates. So this is one of the most overlooked things. It's going to go into law. It's going to pass. So we start seeing those treasuries come down. Please, we'll get some relief. go over this quick. I don't have a lot of information on this, nor do the people that actually brought this in law. They're not sure. All I know is Fannie and Freddie now are going to say, if you have money in Bitcoin, Ethereum, I don't know all the rules. If you have some crypto, before we couldn't use it as reserves. You could use it as reserves or down payment. Sorry, but you have to liquidate it now. If I show my statement, I've got 500,000 in Bitcoin over at Coinbase or crypto.com, wherever you store it. I don't know the percentage on anything. You don't have to. We could use that as reserves, as an asset. So stay tuned for more information on that. That's exciting news. There's an expansion of the LIHTC, which is low income housing tax credit. I'm not super familiar, but what that basically means, it increases funding and loosens bond requirements. So more affordable housing gets built, potential pressure relief on inventory and entry-level buyers. We need much more housing built for entry-level 100%. And hopefully that helps. Well, we got to talk about what could hurt real estate, right? So let's go through it quickly. Number one is tariffs. Tariffs. Mr. Jerome Powell is afraid of tariffs. So he's hurting, number one. Let me just talk about that. Tariffs, I know it's hurting high construction costs and things like that. But also what it is, it's hurting a guy named Jerome Powell's brain, which keeps saying now he doesn't want to cut rates now because of the tariffs. So it's actually cost of capital, cost of getting a loan, cost of refinance government debt, all that stuff is keeping rates elevated because he will not cut. So those tariffs are actually making, construction costs higher, supply, stuff like that. It's also making interest rates higher because he won't cut. So they didn't add that in there. I did. I wrote this thing. But I mean, it wasn't added in the bill, but that's what they're saying. This could be bad. Union labor rules for projects. More federal projects will require union labor. Higher costs, slower bills, less participation from private builders. Honestly, I don't know what you guys think. You might know more about this. Labor rules, this, that. All I know is I live here in San Diego and La Jolla, and over here they're building these crazy monstrosity of buildings. UCSD is, whether it's commercial, residential, and I know they hire labor, big union labor to build it. I'm just going to tell you one thing. It's probably cost more money. I agree. But man, they build really fast. So higher costs, yes, to build. Slower builds, I'm not sure. Less participation from private. So I'm just saying, I'm not saying private can do it, but if these guys are union or labor or whatever, they are cranking, like they build stuff so fast, it's insane. So I don't know. You guys tell me, you might know more than me. No new federal down payment assistance. So no $25,000 first-time home buyer credit, no down payment grants. Buyers still need to rely on state and local programs to bridge the gap. So all those federal programs to buy houses, they're gone. Honestly, we don't need them right now because, the housing, it's just not the right time. So maybe it'd come back if they need it for buying, but for now, it's out. HUD Green Cut programs, this is the one I was telling you. This is probably screwing some builders. Retrofit and green energy housing programs cut. That sets back for eco-conscious developers and buyers. I think a lot of people went out there and built stuff. They're going to get all this money back. Now that's gone. I think they're supposed to build like 3 million homes and stuff. I don't know. I just have some big notes. That's probably going to hurt some people. It's because they banked on a business model around that. So if that's you, that totally sucks. But that is the reality of the situation. So obviously, again, the most important thing is I put in here, what does that mean for interest rates? The SLR, Supplemental Leverage Ratio. Let's hope, fingers crossed, to the rate powerful people up there. Let's hope that the banks really start buying this and they can bring stuff down and lower inflation. So anyways, SLR, inflation cools, things like that. So that also. What's not in this bill is also, Scott Bessent has talked about bringing the 10-year, the spread between the 10-year and the 30-year fixed down. It's not in the bill. You're going to see stuff like that. So after this big, beautiful bill's done and this tariff crap they're working on right now, as they shoot this, hopefully they get down to business and help fix these interest rates. They can do low-level price adjustments. They can do SLR, and they can also do this, if this tariffs don't get blown out of proportion, rates could ease because they'll start cutting rates. Investor-specific tax wins. So 20% of QBI deduction made permanent. Most rental income qualifies. Investors can keep deducting 20% of net income, lowers effective tax rate. I don't know too much about that, so you're gonna have to look that up. Business interest deduction stay. Investors using leverage still get full write-offs. Loan interest, especially important for commercial DSR borrowers. 1031 protected. Nobody's messing with 1031. The reason why that is and why it never goes away is when people argue about 1031. The cool thing is they bring up all the jobs, the money, and what that creates when somebody buys a property in their local community, how much money that brings. So think about somebody that buys a house or commercial building, a new house, they put, all this stuff into it. it. Everybody gets paid. Title, escrow, lender, agent, contractor, appraiser, gardener. Like, it just creates all this money. So it's like when people at 1031, they buy a bigger building, there's just that much more income for everybody. So 1031s are really good, and everybody thinks it's for the wealthy and all this. It's a bunch of crap. There's people that own one property that 1031, and when I say they own one property, they're not billionaires, 100 millionaires, folks. It's just an average person that might have a teacher or a blue collar, whatever, white collar, whatever the hell it is. They just work. They're not billionaires, not 100 millionaires, not even millionaires. Some are just 1031 properties. So it's for anybody can use it, and it's a very helpful tool. Capital gains, rollover, preserved operating zone, or reinvestment deferrals. So operating zones, things like that. Look more into that. That's going to keep being rolled forward. The $5 trillion debt ceiling hike ensures market confidence, avoids default, and keeps capital markets liquid. I don't like that the debt ceiling is going to go $5 trillion. Do I believe that we are going to be able to grow GDP to pay for that? Not sure. Do I believe that the tariffs are going to bring in, which they already showing, they're going to bring in what, $300 to $500 billion a year in revenue? That's to be determined. But if we keep on this path, it seems like we might be bringing in $500 billion from tariffs. Do I think they'll sell the gold card or the membership to the U.S., the $5 million? Sure, that could bring in trillions of dollars too over time and pay down the deficit. I just want that deficit to go lower and lower. Okay, other key housing provisions that's going on. Permanent mortgage insurance deduction. So PMI, FHA, MIP, VA funding fees, all now permanently tax deductible. Helps make low down payment loans for attractive long-term. $750,000 mortgage interest deduction cap locked in. It's not going up, but it's also not going away. Brings certainty to buyers in high-cost markets. Temporary SALT deduction increase from $10K to $40K all the way until 2029. Then that sunsets back to $10,000. Big win for buyers in high tax states like California, New York, New Jersey. And that's about it, folks. That's my thing, the lay of the land. All I will say is stay tuned for more updates on the bill. We'll see how this affects it. Obviously, right now, that if we're talking about tariffs, that is the big talk in Powell's mind. Remember, the influence of Powell and the Fed is 65 to 75% of how that 10-year treasury moves. That 10-year treasury is the barometer of interest rates going up and down. So what the Fed says, if he's scared of tariffs and he's wrong and he's late, that means he'll have to cut faster. If he's right, that means he might not cut. We don't know what tariffs going to do. If they do create inflation, is it going to go down? Also, there's a lot of things going on with inflation that's going to continue coming down because housing, whether it's rents, whether it's housing coming down, pulling back, that is deflationary. That's a big number, a big part of that inflation number. You're going to start seeing that show up in inflation. So hope this helps out. It's a quick little breakdown. If you have any questions, feel free to reach out, hit me up, schedule a call. Love to chat with you. Whether you're a first-time home buyer, you're in the military, never bought a home, you want to use your VA mortgage, all the way to you're an experienced investor that does fix and flips or builds houses or adding ADUs, or you have a big portfolio, you need a refi using DSCR, bank statements, or you just need somebody very creative and that's more of an advisor rather than just like an LO that's doesn't advise people. I don't know what that is, but think of me as an advisor. So anybody that's worked with me, you know that. Anybody that hasn't worked with me, you can call somebody and ask. They're going to say, Kenny, help me with this, that. Just like the lady today, didn't realize who she's talking to. When I start talking about rates, she goes, oh, wow, you really know this stuff. It's like, no, I don't know this stuff. I live it. I breathe it. I'm passionate about it. So I want to share that with you. So anyways, thanks for watching. As always, have a lovely day. And there's a lot more to come from this stuff. And we'll always dive into all the juicy topics. Comment below, share this video with somebody, give me a call, give me a text. Let's connect soon. Have a good day.